Hey everybody, it's Rowan Smith with the Mortgage Center. I want to talk today about assignments and what assigning a contract means, what your obligations are as the assignee and the assignor. Now, I want to define what an assignment is. Let's say that you purchased a place, or you wrote a contract on a place to buy a home. And maybe the completion date is April 15th or something like that, and it's January 13th today. Now you go and you take time and you arrange your financing, you get everything in place, you remove subjects, you get all of that done. And then what happens? You get transferred in your job. Now, you can't back out of that contract at that point. All right, you have entered into it, it's binding, you remove subjects, you still have to complete, even though you're being transferred to another province. You can either rent the place out, or you can try to sell it on assignment. And what that means is you're going to sell the rights to that contract. Now, a lot of people used to use these to make money in the late 90s, early 2000s and onwards, and the way they would do it is that they would buy a pre-sale. So maybe the place is going to be built, 2 years down the road. And the person would write the contract today, they would get into it with a small deposit, and then they would go and they'd have to wait 2 years until the property would be completed. Now, during that time, of course, the market was rising and rising and rising. By the time they had to complete, they only actually had put a very small percentage down. So their options were to complete and buy the place at that value, or their option was to sell it on assignment and ask for some lift. And lift is the value that you've got that's resulted from the market prices rising. When you contracted to buy the price here and the developer is stuck with your price here, and then 2 years later you're selling it for this amount before you actually complete. So someone's buying that contract from you. And if the value of the home's gone up $100,000, you could get $100,000 up front based on selling your assignment. Okay. However, some banks don't allow assignments, so when it comes to financing, you got to be careful. The other thing is, going back to my example of a home that was going to close in April, if you were to sell that home, chances are there's not going to be a material difference in the value of the home at the end of only a couple of months. So you'd be lucky to get your actual purchase price. If you were buying it for $400,000, say, you probably would only get, I'm grabbing numbers out of the air here, $390, $385, something like that. So you may still be out money. If you're fortunate, someone will buy the contract off of you for the same amount that you were going to be paying for it, and therefore it would be a wash. Rarely does life work out that well, however. So I've had some inquiries on assignments, and a couple of things have come up, and I understood there's some misunderstandings regarding these topics. When you do an assignment, when you try to sell the contract, you're not selling your financing. So in the event that you've gone and you've arranged a mortgage and it's totally done, and you, let's say it's me, Rowan, you're completely approved to buy a home, you're completely approved to buy this home on this date for this price. I turn around because I got transferred and I want to sell the right to buy that home to somebody and just try to break even and get my money back. I can do so. That person now has to arrange their own financing, and how they do so is entirely up to them. They may not even need financing. Maybe they're a cash buyer and they're just going to pay for the contract outright. It all depends on each individual person. The important lesson here is that you cannot assign your financing prior to completion. You're only assigning the contract. So it's very important to make that distinction.